Welcome back, Alpha Hunters. The markets are rolling today. Not really doing a whole lot, actually. Um, yeah, I mean they're kind of flat right now. We did have a nice little gap up today, and we did gap up about 1/3% on the SPY, and then we just kind of pulled back there for the first 4 hours, 3 hours of the day, and then over the past hour and a half, we've seen it bounce off the lows. Not looking too bad. A little slightly positive here on the SPY. Qs, on the other hand, actually looking a little bit better. Pretty solid gap up here on the Qs. I think we gapped up like points, like 3/4. Yeah, about 3/4% there on the Qs. Chopped sideways there for about 30 minutes. And a nice little drop sideways again. Dropped again. Kind of more of a sideways kind of bounce here. Not exactly a strong bounce, but the gap up is looking pretty good. IWM, which, yeah, not looking too good yesterday. And we're going to talk about the next three here for a bit. But the IWM did have a little bit of gap down this morning, down about 1/4%. Just traded lower there for the next 3.5 hours, trying to bounce here over the past hour and a half. We'll see what happens. Okay, so the DIA, though, had a nice little gap down here as well. Gap down about 0.2%, traded lower, sideways, bouncing here over the past hour and a half. Okay, so a lot of these have the bounce over the past hour and a half. RSP, nice gap down here on the RSP. Gap down about 0.2% as well. Traded lower there for about the first hour, and then the middle part of the morning going into midday, not as bad, and it definitely has the bounce here over the past hour and a half as well. So the thing that's kind of concerning is out of these five, and it's the rotation, right? It's the rotation. The RSP is not really doing a lot. I mean, outside of yesterday's gap up, I mean, we haven't really been seeing some good things. I mean, there really hasn't been good things. It's just kind of been mellow things. Same kind of deal here for the DIA. Though we got two lower wicks here over the past 3 days, 3 trading days. So we'll see what happens. But eventually, like if you throw a lower wick the size of one we had back on Tuesday, like you should bounce out of here. But the fact that we're already coming back down, I mean, we might break this down later on the DIA. I wouldn't be surprised. The IWM also with that huge gap up yesterday, but other than that, I mean, it sold down pretty hard yesterday, and it's selling down again today. I mean, it's just kind of nuts. And then the Qs is just like fairy tale land, and it is super weird. I saw some statistics yesterday. I wish I had them ready to go. I'd show you, but basically, like the Qs and like the concentration in the top end of the S&P 500, like the big tech guys, the Qs. It's also the tech the stocks that lead the Qs in many ways. This is the largest concentration we've ever had at the top end. It is absolutely insane how concentrated we are, and just into the very small few high end stocks. And you gotta ride it, but you don't have to be naive about it. Like, you gotta realize eventually, all time or highest ever or lowest ever, those things come to an end. And when they come to an end, they are usually very, I'm not gonna say painful, because it's not always painful, but those opportunities are done. They're just done, right? And if you've been riding the train, it's fine. Just keep riding the train. Just talking about here on the Qs, but just have like certain spots where it's like, okay, I'm down to have stop losses. Obviously, under this wick down here makes a lot of sense. If you want to look at ratios, look at Q versus SPY, and you want to say, okay, Q versus SPY ratio, obviously down here. Another interesting one would be RSP versus SPY. And I mean, just look at how the equal weighted is comparing to the market cap weighted. I mean, the RSP is just getting absolutely trounced. Especially, I mean, especially since the beginning of May, just absolutely falling off there. And I mean, you look back in history. I mean, outside of whatever flash crash or whatever happened there, crazy low levels. I didn't realize the RSP went back that far, but there you go. So I think a better way might be to look at the SPY versus RSP. There we go. That might be a little bit easier to way. So yeah, we're just kind of, I don't know, kind of breaching in getting into like some extreme levels of concentration in the marketplace. So do you not write it? No, you write it. I'm just saying, just be aware. Like when it ends, it's gonna be like decades of unwinding, or a decade, maybe half a decade, decade and a half, something like that, of unwinding capital and allocation. And people aren't going to realize that the big guys, the Microsoft, Apple, Amazon, Alphabet, Meta, Google, like they're going to slowly fade into the background, and you won't even realize it. It's like AT&T, Exxon, those guys that used to be the big dogs, still around, still relevant, but they've just kind of faded into the background. So that's all I'm gonna say about that. We've got a couple other things to kind of talk about here. We'll talk about Fed stuff and inflation stuff coming up here in a second. VIX, not really doing a whole lot. Not today. Throwing a nice little upper wick though. See what happens. Probably continues to drop off, which means the market probably continues to push higher here. Dollar, nice bounce back day today. Nice lower wick yesterday. Kind of checked into this little point of this double bottom here over the past week. Nice. Okay. Nice bounce back. Thing you'd want to see about the dollar though is closing above yesterday's open. I'd want to see that for the dollar if you want the dollar to go higher. GLD, gold definitely seems like it's going to pull back. That's just fine. That'd be good. 10-year yield dropped off pretty good again today. Okay. I mean, yields have been definitely crazy here, and a big reason why they kind of dropped off today is take a look at, well, one, it's probably just follow through from yesterday's CPI and Fed, but we also got PPI this morning. It came in at 2.2%, which was under the forecast of 2.5%, and prior month at 2.3%. So yeah, there you go. PPI coming down a little bit as well. Even core PPI 2.3%. Forecast is calling for 2.4%. Okay. So there you go. So yeah, we got some inflation coming down. The one thing that was concerning, and I didn't hit this, I should have, was the initial jobless claims right here. 242K. 242K. The forecast was calling for 225K, and prior was 229. So yeah, pretty good jump there. And we've definitely been on an uptrend here on this chart for the past several weeks. I mean, we see we've got basically this whole year we've got a nice little uptrend kind of going on here. Even it seems like we're kind of breaking out on an uptrend here. So obviously can't really trade this or look at this kind of the way you do equities, but or stocks or other things. But once trends start, they usually will continue on economic data. 10-2 inversion, just kind of hanging out. All right. HYG, oh, nice higher open there on high yield corporate bonds and sold off. Probably pulls back some more. Okay, LQD just kind of hanging out. Today, not really doing a whole lot. TLT continue to push higher. Yields are longer term yields, especially, are down. And sector rotation for the day, we got real estate and tech actually both doing pretty well. Yields have dropped over the past 2 days, so it makes sense that real estate's doing pretty well. Obviously, tech getting some pretty good follow through. Also, speaking on the tech side, real quick, AVGO, AVGO or Broadcom initiated a stock split, which will go into effect July 15th, I believe. I don't know the exact stock split ratio, but just be aware that in about a month, AVGO will be doing a stock split. Utilities also outperforming today. Staples and discretionaries outperforming. Okay. Underperformers: materials, healthcare, financials, energies, communications, and utilities. Intraday, a lot more mixed up here. Intraday. Okay. Healthcare, staples, real estate, utilities, communications, materials, financials, energies, all outperforming their intraday. Okay. Discretionaries, tech, industrials underperforming during the day. All right. Yeah, I'd say the other thing that kind of came out of yesterday's Fed talk, which, just kind of wrap up what the Fed even said yesterday, was basically they see the possibility of just one rate cut by the end of the year. Now, when we came into the year, when we came into 2024, it was going to be three rate cuts. That was the plan, three rate cuts. And now it's down to even the Fed saying they're just going to have one rate cut. So there you go.